Today's Cardinal lesson, the yippee, long-term care insurance, and specifically traditional long-term care insurance. And we're going to review a specific recommendation for somebody who's 65 and 65. This is, when I say recommendation, I'm not giving financial planning recommendations. I'm just showing you an option, is a better word than recommendation, to show you what two people, a man and a woman, 65 years old, and they're a couple, or individually, a man 65 or a woman 65, can pay and purchase for long-term care insurance. So what we're going to talk about is the mutual care custom solution. And it is available in all 50 states in the District of Columbia. Not this exact policy, but a policy from Mutual of Omaha is available anywhere in the country. And we at Cardinal are licensed, Tom and I are licensed in all 50 states in the District of Columbia, so we can offer you something if you're interested in this. So I want to bring Tom on, and I want Tom to talk about the particular policy that we're profiling today.
Sure. And so we have in the show notes, which are the link in the description of the video, they're also on our website. But if you pull up the show notes, we have the picture of the board. Some people like to print it out. Later in the show notes, we actually have the full proposal that is represented on the board. So I'm going to go over some of the specifics here. And so if we look here, make it a little bigger. And so again, this is a sample client, a male who's 65, a female who's 65, they're married. And we're just going to go kind of piece by piece to kind of walk you through the illustration. The first main point I want to make is the policy limit is how much they will pay in the first year of care is $216,000. That number will grow. There's an inflation benefit we'll talk about in a second. So in the future, that will be a higher amount, but that is the total amount per person this policy will pay for. How you actually access that $216,000 is $6,000 a month. That covers nursing home, assisted living, home health care, really the main areas where you would receive care. It will pay $6,000 a month per person for up to that 216, which works out to be 3 years. Again, those numbers grow over time with the policy. There is a elimination period of 90 days. What that is you have to pay for care for the first 90 days. You can think of it kind of like a deductible in traditional health insurance, as you pay the cost first, and then after you have paid that, the insurance company will pick up the rest. And one of the things that adds a lot to the cost actually is this 3% compound inflation rider. What this number does is it increases the monthly benefit by 3% every year you hold the policy, as well as the maximum policy limit. So over time, this number will grow. As you start out with 6,000, it grows by 3% the first year, and then that 3% compounds on itself every year you have the policy. So 20 years from now, this policy will be a lot more benefits than it currently is. There is you can see in the pricing is if we look at the cost for the male, it's about $3,500. The female is about $5,900. So you can notice right off the bat, the females are a lot more expensive than men are. And statistically, women need it more often, which is part of the reason of that cost difference. It also has savings. If you're a couple, they give you some discount to lower the cost a little bit. It's like a 15% discount. So that helps reduce the cost a little bit, but it's still a pricey policy. And so, Hans, I don't know if you want to add anything else to that.
Well, I do. I mean, people say, well, that's expensive. Yeah. And are you referring to the price of the premium, or are you referring to the cost of care into the future, which could well be $100,000 a year? And I know you're referring to the premium, but it is relative to what? And this amount is what they're showing is down here is for the male at age 85, if you would have to use the policy for 196 days, which is a little more than half of a year, for you to get all your premiums back that you paid in terms of benefits. And for a female, you'd have to use almost a year of care, and there's a pretty good chance of that. And I think that's why these insurance companies, number one, charge so much, and then secondly, they charge a lot because they're slow. Actually, they're slow to issue these things. I mean, we send in a lot of couples on these, and only one of them gets approved. So just know that this isn't guaranteed that you can receive this.
And I'll make the point that's a good point. Is there part of the reason because you say, okay, well, if we knew you needed care and we just had a crystal ball and we knew you needed it, paying something that only takes a year, if this will pay for 3 years, and you get after the first year you get your money back, and then you have 2 years of more benefits. I mean, that's a great deal. You'd sign up for that in a heartbeat, and the insurance company knows that, and that's why they're so picky on who they take. And so we get a lot of people that say, "Well, I'm healthy. I don't need this." It's when you're healthy is when you need to start looking at this because as soon as something happens health wise, it becomes a lot harder to qualify for these policies. And then in the show notes, we have that breakdown of the different how long it takes to recoup your money. The next pages of the show notes are really we're going to go through them pretty quickly, but they're the outline of coverage. They show like all the specifics of the policy. Hans will talk more about the specifics here that are listed on the board, but you can see we've highlighted sort of the important pieces of that. I would encourage you to download it, print it out, and really read through these policies because I think a lot of the long-term care policies are pretty standard in a lot of the language they use. So they're not identical, but if you read one and understand one, you're going to understand most of them. And they has a lot of good information just to know kind of what the specifics are.
Well, yeah. And so these benefits or provisions or whatever we want to call them, I'm going to go through these in a second. These are baked into most of the long-term care policies, or really all of some provision of the long-term care policies that we offer, including the hybrids. And so when people look at these policies where they just throw in $100,000 for one person, or they throw in $200,000 for two people, and then they get a life insurance benefit if they don't use it for long-term care, but they get much larger benefits for long-term care, this kind of cost and more is baked into those policies. So that's part of why we're going over all those provisions of a traditional long-term care, because the costs are baked into all the alternatives as well. So now let's talk about this a little bit. The federal tax 7702B is just, that's mentioned right in this policy, and it really was the IRS ruling that long-term care policies, the benefits from them are tax-free. Okay, so that doesn't, most people assume that, but I just wanted to refer to that provision. There's a waiver of premium in this policy, and if you're couples on the policy, both of your premiums are waived if you're using the policy. If you're just one person, then your whole premium is waived the whole time you're on claim. And you can read the details on that, but that's a nice feature. The elimination period is once in a lifetime, and it's calendar days. So, most people begin their policies with home health care. And so anytime you get a service for home health care, that counts as a day, and they're calendar days. So if you get that like 3 times a week, you're going to reach your 90-day elimination period in 13 weeks or so, because all the days in between where you don't get care count. So a little confusing, but we'll get into that. The care coordinator, they have a care coordinator benefit inside of the policy, and many of these plans have that. And that's where the insurance company has a service that will help you access care and get the care plan written up. The care coordinator benefit is voluntary, so you don't have to use it. You can just do it on your own. It has no cost, and it's really there for managing and arranging care. And the insurance company provides this to you. The home health care benefit, I had a lady ask me the other day, which told me that I was skipping through the details too quickly and just talking about, does this policy pay for home health care? And I said, well, that's most of what you're buying it for, because people that can afford these kind of things, they want to stay at home. They don't want to go to the assisted living or the nursing home unless they have to. They want to get the care at home. And Of course it does. And under the home health care, I listed a whole bunch of things they'll pay for. But what we most commonly find in claims is they're going to pay for a home health aide, which is somebody to help you with the basic things of life, the 6 activities of daily living. They're going to pay for homemaker services, which is somebody to just take care of your house and cleaning and meals and just straightening up and just, I guess, mowing the lawn, washing the windows if that's necessary, maintenance or personal care, and just to get you a haircut or a beauty makeover, or to help you get a bath, help you get dressed, help you get ready so that you can go out into the world or go to the doctor. I mean, there's a whole range of services under home health care beyond just providing the traditional things that you would get in an assisted living. It pays for an assisted living facility. It pays for a nursing home. It has a respite care benefit. So if you have an unpaid caregiver, which many times is a spouse or an adult child of yours, and they need a break, this policy without the elimination period will pay a benefit for you either to go somewhere and be cared for or to be taken care of at home so that this person can have a break. The international benefit is, I found this real interesting because I hadn't read one of these in a while, but inside of this policy, you can't buy this if you're not a US citizen or have a green card. I mean, you can't come here and buy it and go use it somewhere else. But if you're a US citizen or you have a green card, you meet all the underwriting qualifications, but yet you go use this long-term care policy in another country besides Canada or the United Kingdom, they're going to pay on an indemnity basis, which means they're just going to send you the $6,000 a month or the inflated amount every month. I mean, you have to prove that you're getting care and that you're needing care, but they're just going to send you an indemnity benefit. And there is no waiver of premium or care coordinator benefit on the international. So these things can be used in other countries. For the chronically ill, it's going to cover 2 of 6. You're required to be called chronically ill to need help with 2 of the 6 activities of daily living. They're written out there. And my experience is the easiest way to get a claim paid on these policies is bathing and dressing. Is this, I help people assist. I mean, just zero in on those 2 things, that if you need help with bathing, which many people that are needing long-term care need help bathing, and if you need help getting dressed, those 2 things are all it takes to be able to call you chronically ill so that the policy will pay benefits. It's the 2 of 6 ADLs or cognitive impairment. And the cognitive impairment just simply means that you need substantial supervision for your own safety and well-being. If you qualify under the cognitive impairment, you don't have to meet the 2 of 6 ADLs. So what I want to go over today is, we really have just talked about long-term care and we've talked about taxes. And so we've really only talked about 2 of the 7 worries. But I wanted to get into the blood and guts of a long-term care policy and tell you what's covered. And with that, I'm Hans Scheil.
And I'm Tom Griffith.
And we thank you for listening.
Thank you.